This market rewards boredom and it punishes impatience. Have a look at this. At the top, we see the stablecoin dominance. How much of all of crypto is currently in stablecoins is currently risk off. At the bottom, we see Bitcoin's price. Now, in the first years, we simply saw adoption of stablecoins. But then, in the last 3 to 4 years, that adoption has halted. And now the percent of capital in crypto that's in stablecoins is just a metric of how fearful the market is. If the market is risk off, 16% of capital is in stablecoins. When the market is risk on, that's only 5%. And have a look at how this negatively correlates. So you want to sell when everybody is hyped up, when all the stablecoins are deployed. We want to buy when the stablecoin dominance is high and when crypto prices are low. Right now, we are at 11% stablecoin dominance. And we have been there before in May of 2022. What happens to the Bitcoin price in case we hit the 16% stablecoin dominance again? How much can we potentially fall further? So the current dominance level over here corresponds with the dominance level over here. How much did Bitcoin fall at that point? The answer is roughly 46%. In the worst case, if history is any indication, our current price level still has room for another loss of 46% from here. So where does this bring us? The answer is roughly $41,000 per Bitcoin. And interestingly enough, the average cost basis of the market is currently at $55,000. So where are we going to bottom out? In the past, we did go below the average cost basis. Last time it was roughly 25% below. So 25% below 56K, that's 42K. Isn't that interesting how we get the exact same kinds of potential bottoms? Looking at completely different metrics. A metric of how much the market can potentially be risk off versus a metric that shows the average cost base of the market. This is an on-chain metric. We're looking at all the Bitcoin and check at what price did it move. And we tend to bottom out. We tend to see less sell pressure whenever the average investor is currently in losses. And the idea is that people simply don't want to realize those losses. That long-term Bitcoin is likely going to go up because it doesn't expand as quickly in supply as fiat currency does. And so if an investor is currently in losses, it's more likely that those losses simply get weighted out. That means less sell pressure. That means there's a higher likelihood we can recover. But again, that process starts at 56K and can bring us down all the way to 42K. Now, is 42K the magic number here? Does it mean that it makes sense to put in all capital, all net worth into BTC in case this bear market goes all the way to that level? Not so quick. Saying that 42K is the absolute bottom is the same as saying that tech stocks can only drop per maximum by 37%. Now, why do I talk about tech stocks here? And why do I say 37% is the maximum when clearly that's not the case? Here's why the comparison of tech stocks at the top and Bitcoin at the bottom makes a lot of sense. Have a look at how those two assets tend to move in the same direction at the same time. They tend to peak at the same time. They tend to bottom at the same time. The movements are magnified with Bitcoin. And when we try to quantify this, how much do those two assets actually move in the same direction at the same time? We get this here. This is the correlation coefficient. When this is at 1, that means the two assets move always in the exact same direction. When this is as -1, it means they always move in opposite directions. This is a 1-year correlation coefficient. So we look at the performance in the last year, and we tend to have very clearly positive correlation. This has not always been the case. When we zoom out a bit more, the correlation was much weaker. Sometimes we even had negative correlation. Just recently, as Bitcoin got more and more financialized, as Wall Street owns more and more BTC, as crypto became more and more sensitive to the credit expansion cycle, and there's all this leverage in the system, only since then we see how the two assets move more and more in sync with each other. Very quick reminder, if you want more analyses like this, then all you need to do is subscribe. And so that's the problem with charts like this. For Bitcoin, really, we only have 15, 16 years of price data. In the last 15 to 16 years were not typical for risk on assets. When we look at the Nasdaq 100 again, when I said that the maximum drawdown can be only 36%, that's because this chart shows only the time frame since Bitcoin existed. But Bitcoin got created at the height of the global financial crisis. That was that drop over here. Technology stocks lost more than 50%. And then we had the dot-com bubble burst. Here, prices fell by 83%. All of those models that we have for Bitcoin that tell us potential cycle bottoms, they all assume that this year will continue forever and that there is no chance at all that we could see another global financial crisis or another dot-com bubble burst. But is that really realistic? I do not think so. On many metrics, it looks like traditional finance is extremely high right now. This is the Shiller PE ratio. This is the price to earnings ratio of the S&P 500. It's currently above 40. It was only higher at the peak of the dot-com bubble. Subsequently, valuations dropped by more than 50%, and then came the global financial crisis, another drop of 50%. And so we have to take this seriously. We do not know if PE ratios can expand further since the dot-com peak was much higher than the peak before the Great Depression. But still, it's noteworthy. It at least tells us that the time since Bitcoin's existence is not typical and that the volatility that we get from different models might actually underestimate how bad it can really get. If AI was really a bubble, if we really see overinvestment, if valuations go down, and we see something at least remotely comparable to the dot-com crisis, then 42K is still extremely optimistic as a potential bottom for Bitcoin. We're likely going to go much lower than that in such a scenario. But of course, we don't know how long the tech boom lasts and how sustainable growth in AI is. We all use the internet. You're watching this video through the internet. And so obviously there was some substance to the dot-com investment frenzy. There was simply just short-term too much of that investment. And we needed a consolidation. And maybe at some point, artificial intelligence will reach a similar inflection point and we might have to consolidate. And that, again, because of the high correlation of crypto to tech stocks, might drive down Bitcoin and, of course, all the altcoins as well. And so I simply stay extremely cautious. I just trade the trends. You know how I'm following the best moving averages, the 44-day simple moving average and the 125-day simple moving average. I am short the market since October of last year. Here's the backtest result again. The duration of the moving average also on the x-axis, the annualized performance on the y-axis. The 44-day and the 125-day used to be the best. This is how much they outperform. This is the 44-day. So buying and holding Bitcoin is the white line. Here's the backtested result in turquoise. This is a logarithmic scale, right? So every horizontal line here is an additional 10x. Here's the same for the 125-day simple moving average. So really, I think it's best to simply follow market timing strategies that tended to work in the past. We do not want to blindly buy. We want to just go with the trend. And following the trend tends to be a winning strategy, right? Just have a look at this. Buying and holding Bitcoin, this black line here, always underperforms following the trend using moving averages. This is simply just an optimization exercise, but in general, crypto moves in trends. And currently the trend obviously is not bullish. Now, there is a case to be made that maybe currently we are a bit overextended, right? If we are still bearish, even after going up by another 20%, does it still make sense to sell the Bitcoin right now? Or should we maybe wait for a slight recovery rally? To answer that question, let's have a look at this here. This is the extension from the moving average. So the dotted line here, that's the 1x cross point. So whenever we cross the dotted line, we are also crossing the moving average. And so this data point here, for example, is 50% above the 125-day simple moving average. Let's zoom out a little bit and we can get potential bottoms. When we are at roughly 50% of the moving average value. So that was over here after the minor collapse at the end of 2018. That was during COVID. That was after FTX collapsed. That tends to be potentially a turnaround. We tend to see a very depressed market and it might make sense to buy against the current momentum. But when we are not at that low of a level, does it really make sense to buy? We aren't even at a level comparable to the drop in November of 2025. The moving average extension to the downside can be much more severe, by another 32% or so from the current price level. And again, since the moving average is already coming down, 51k in Bitcoin is probably underestimating how much we can fall from here. So every day this level moves lower as well. But if we were to crash extremely quickly from here, then of course it might make sense to pick up the pieces. Very similar to what we have seen with the COVID crash. But again, we need an accelerated, very quick deleveraging event to make this a viable contrarian option. We are very far away from this. And so that's why I simply just continue following the trend. The trend is currently bearish, and I don't think we have sold off quickly enough to make a contrarian bet. Yes, I do not know what happens tomorrow or the day after tomorrow or the next week. And there is a chance we could rally by 10% or more. But I'm not really a fan of making such bets if overall the statistics say that we should simply bet on falling prices whenever we are below the 125-day SMA or the 44-day SMA. And obviously, we are currently below both. By the way, if you want to follow those strategies, there is automatic copy trading available for the premium members. We've got the Bitcoin trend following, we've got the Ethereum trend following, and we've also got bets on falling altcoin valuations. All strategies are currently in nice profit, so you don't necessarily have to execute every single trade manually, right? You can simply deposit your funds, and then hopefully the backtested results will continue in real life. So far, it looks very promising. A like on this video would be very much appreciated. It helps the channel grow. Feel free to also subscribe in case this is your first time. See you next time on YouTube or see you in premium. Cheers!